Good morning, everybody. This is Patrick Montes de Oca with the live trading room here at the Equity Management Academy. What I would like to do on this segment is to get right into the silver market as we are getting some indication that the silver market corrections are pretty shallow. They're not lasting to the downside as deep as previously have occurred, in the pattern seem to be more of a continuation pattern. In taking a look at this chart in silver futures, we can see that we see a bit of a descending wedge, a descending triangle, and that is a bullish indication, a technical configuration, a geometric bullish indicator that if the market was to close above the resistance line that you see here, that it would activate a buy signal. And what we have done here is we have entered into a bullish mode by trading above the 9-day moving average that we use, and also breaking above the wedge resistance line. And you can see here that we ran up pretty much the next 2 or 3 days, and we have made a high yesterday of 1741. The high was 1774.50. That's a pretty substantial gain from a low that we saw of 1663. That's a dollar move in about 5 days. And so the market seems to be supported by very strong demand on any corrections. And we recommended after the market reached a high of 74.50 and met our targets, our weekly targets that we published last Saturday, basically we recommended that these targets were completed. We have come down here today, and I'm pointing this action today because I think it's really a very important indication that the market does not have any interest in coming down below the 9-day moving average, which is about 1730, and in fact it has found a tremendous amount of support, and it looks to be building a pattern that potentially, if we do close within 25% of the highs, you might say, of the day, anywhere in the 1750 or above 1742, it would be an indication of a pretty much resumption of the uptrend. Okay, what I would like to do is show you one of the indicators that we use, which is the Fibonacci trend lines. If I can find him here in a minute. These are the Fibonacci fan lines that we use to identify for us the support and resistance levels in the market. And you can see here, once the market broke above these indicators, the target automatically was this upper level above of 1770, 1777. And we announced it here in the room, prepared our subscribers basically that this was the level to take some profits off the table, to adjust your position a little bit, to hedge a little bit. And in fact, it did turn out to be true, by the market coming down to a low that we saw today of 1726. Now, this correction came right into our algorithms that we use to trade the market. And if we can, let me see if I can bring them up here. Then you are going to see basically that today's action in the market was extremely bullish. The market came right into our daily indicators, our daily codes that indicated a buy 1 at 1731 and buy 2 levels of 1720. The market coming down to 1726 activated a buy signal in closing for the period above 1731 and using the 15-minute bar for day trading. It indicated to us that the market has activated a buy signal on the daily. It has come back above the weekly sell 1 level of 1742, penetrating that level and activating basically the daily code of 1753. So we are penetrating resistance, weekly resistance, and daily averages that indicate the market wants to move higher, possibly into testing that 1773 level or higher. And let me just show you that if we are able to close above the highs here, it would indicate closing above all this resistance that shows by the red color, the weekly resistance, the daily resistance, the moving average, the average price on the weekly. So 1753 is validating again and activating a potential test of the high that we made yesterday, and closing above that high, which is about 1774.77. There is hardly any resistance at all the way up to about 1852. So in following the market, it appears that this correction has been completed to the downside. The market has resumed the uptrend to the upside and is set to challenge the highs of 1777. Closing above 1777 would activate the targets above, which is about 1851. Once again, this is Patrick Montes de Oca. Until next time, my friends, I will continue to update you on this incredible trading tool called the VC Price Momentum Indicator that we use to trade here live at the Equity Management Academy Trading Room. Be well, good trading. Take care.